Hi, it's Andrew Bell with you as we proceed into the last couple of weeks of summer. It's been a stunning summer here on the Gold Coast, albeit like so many other parts of Australia, very, very hot. The event continues to roll out sales on a daily basis. Some of the negotiations did not conclude with a sale on auction day, but more than 30 properties have sold in just the past 10 days. And there's plenty more sales in the final stages of negotiations. A stunning result. And I'll be able to report more on our commercial auction results very shortly, as they only occurred this week. A couple of interesting things have surfaced that help us shape the direction for 2017 for the real estate market. The economy and the GDP, one of the 5 fundamentals that drive the real estate market. A bit of a surprise that nobody saw coming was the latest trade surplus figures, which were records, particularly off the back of a surge in coal and iron ore prices. This certainly puts to bed the risk of a technical recession and perhaps increases the risk of a rise in interest rates later this year. The surplus was $3.51 billion, and last week they also announced that the November surplus was revised upwards to just over $2 billion. These certainly make for interesting challenges for the Reserve Bank. The lower Australian dollar stimulated the trade boost. However, the dollar has risen off the back of these great results, which actually would mean, in most cases, a temptation for the Reserve Bank to drop interest rates and weaken our dollar. Although if the economy starts to get a real kick on, they'll want to move out of these record low interest rates and increase them. It's going to be a really interesting juggling match for the Reserve Bank. Unemployment is one of our other fundamentals that drive the real estate market. In January, a jump in the number of job advertisements weighed to the argument that the economy was remaining very strong. Job advertisements on the internet and in newspapers rose by seasonally adjusted 4% in January. In fact, in the year to date to January, job advertisements are up 7.1%. It will be very interesting to see how this impacts on unemployment, which continues to have a debate about what are the true unemployment levels. The economy has also heavily benefited from the construction industry. It took up a lot of the slack when the mining boom ended, but of course it can't continue at record levels indefinitely. A report out in December by the Housing Industry Association says that they confirmed that this peak in the current cycle has now passed and there was a downward trend in building approvals, which means that we're also protecting ourselves from any risk of oversupply. They suggest that building approvals peaked in July and by December were down some 18% than the peak. All in all, a reasonable level of positive news off the back of fears in late 2016 that our economy was slowing and heading towards a technical recession. As we all know, we could be doing better. However, we are still one of the best performing economies in the world, although there's no room for any complacency. I look forward to catching up with you in a fortnight's time. Stay safe till then.